Hello everybody and welcome. This is Tushar Chande. In this episode we explore the question of what is the best exit strategy for Nvidia during its megatrend, assuming you want to hold the position to maximize your overall profits. There's a lot of noise in the market, cries of overvaluation, using Cisco as a template saying, oh, it's going to crash and burn, and so on and so on. So let's explore. A gentle reminder: past performance is not necessarily indicative of future results, and there's risk of loss in trading. So the first problem we have is how do we quantify prior moves? And we're going to do that with expanded Fibonacci reference levels using Cisco, Amazon, Microsoft, and then Tesla and the ARK ETF. This is monthly data for Cisco systems. We have a nonlinear scale here, and we've quantified the move by using the amplitude of this high and this low in 1994, and we have expanded it all the way up to about 47x in terms of the Fibonacci extension. So you'll remember the usual numbers like 1.618 and 2.618, and if you keep expanding the ratios, you get numbers like 6.8, 11.09, 29.03, and all the way up to 46.979, and we can keep going if we wish. Remember, when this rally started here, we have absolutely no idea where it's going to end up. And there were lots of skeptics and naysayers along the way. And the real fortune was made by buying, say, this breakout and trying to hold for as long as possible. So that's the challenge, and that's the problem we're going to tackle. Here's another monster move, this time in Amazon. The time period is from 2000 to the present time. The vertical axis is again a logarithmic axis. We're using the December 99 high and the October 01 low as the X, or the amplitude of the move. And the current move is more than 29x, where X is this distance. So another monster move, and how should we have played it? Here we have monthly data for Microsoft starting about 2000, running up to the present time. The vertical axis is logarithmic. We're using the high and the low, the early 2000 high and the late 2000 low to quantify the move. And the extent of this move is something on the more than 7x, maybe 8 or 9x. And remember that Microsoft essentially went sideways for the longest time, for more than a decade before it started rallying. But when it did, it had a wonderful move. And how should we have played it? Now remember, for example, we're getting resistance and support near Fibonacci levels. Again, a resistance and support near Fibonacci levels. So traders are watching these levels. So our answer to how to use the ideal exit strategy is to use the Chande Kroll exit. This is a two-step calculation with 4 parameters: P1, P2, P3, and P4. We first calculate the highest high of some length of days or months called P1. From that, we're going to multiply a constant number of the average true range calculated over another parameter P3. The next step is to take the maximum value of the first calculation over another time period, say P4. And then we're going to lag everything by 1 month. You don't have to, but for convenience we will, because for the new month, we already have the exact value from the previous month, because all those data are known before the new data come in. So this is monthly data for Nvidia, and I want to show you why we need to calculate these two stops. The blue line essentially is the first term from the previous slide, which looks like the chandelier stop, and you see it deviates a lot, it drops a lot as the high drops, and it fluctuates a lot from prices. And then my version of it uses the highest value over some number of days, and you see it flattens out. So when it's rising, my stop is rising, and then it flattens out. And this little gap you see is because of the 1 month lag. So we are lagging it just to make it a little easier to live with it in real time. So we are back to the Cisco chart. Just as a reminder, nonlinear scale. This is data in the 90s, and we're trying to understand how we could have traded this mega rally. So this is the Chande Kroll exit with monthly data, logarithmic scale. The default values are 12, 12, 4, and 12. So we are first calculating the highest high of the 12 months, then we are subtracting 4 times the 12-month average true range, and then we're taking the highest value of that first step. So that's what these numbers mean. And here's what it looks like. We have the highest high lagged by a month, and then this is a stop. And every time it goes below the stop, the trailing stop, we'll exit. Now remember, we are lagging it 1 month, so this data point is known at the end of the prior month, and so on. So it's very easy to use. Now, if we had taken the breakout, say at this high, we would have entered somewhere between, say, around a little more than $2, and we could have taken it all the way through September of '98. So from '95 through '98, we could have re-entered in '98 and then taken it all the way to 2000. So without knowing where this trade was going to go, of course, we had to sit through these volatility bits. You still had to, you could have taken it very close to the absolute high of the move, which of course was not known when the move started somewhere over here. This is monthly data for Amazon starting late 2006 and running all the way out to 2024. We had this big sell-off in 2008, and after that we had this absolutely incredible move. And if you had taken the breakout here in 2009, you could have carried it all the way to 2018, say end of 2018. So you could have held this trade for the most incredibly long period of time without any ambiguity about where you were going to get out. And of course, we're using the default values for this Chande Kroll exit. Now the valuation arguments were made over and over again. So here we have an example from August 16 of 2012 where Amazon is overbought. Another example of a negative headline from 2014, and yet another argument about overvaluation in 2017. So just to remind you, we had all that negative press here and here and here. All the while the stock just kept going higher. And of course you'd have had to have the patience to stick with the strategy and follow it all the way up. And remember, this is a logarithmic scale, so you could have gone somewhere on the range of, say, $5 all the way to maybe $75 to $80. So a truly magnificent move with lots and lots of negative press. And all you had to do was just follow the trailing stop, which you could calculate at the end of the previous month. This is a chart for Tesla, monthly data, logarithmic scale, default values for the Chande Kroll exit, a very long consolidation, and then a rally. Again, it would have been stopped out here because of volatility. The rally resumed, big move up, and you could have taken it pretty much to the end of this particular move. Tesla again, but now monthly data with a linear scale. We're using the highs and lows in this region to give us the delta X. The move was almost 30 times delta X, so a humongous move. Again, trailing stop using the default parameters for the Chande Kroll exit. Now you see the problem with Tesla, it was very choppy, so you could have taken this breakout and got stopped out once, stopped out twice, and then that's whatever a losing trade stopped out a third time. So that's certainly one of the challenges of using monthly data and trading a very volatile underlying stock that could stop you out. Monthly data for the ARK Innovation ETF, again with a nonlinear scale. Nice trend up, long consolidation, breakout, stop out, again a long move and a stop out. So certainly the Chande Kroll exit with the default values is a very nice tool to keep you in the direction of the major trend and be able to sit through drawdowns, which is never pleasant, but if the market continues to rally, it just helps you capture more of the eventual trend. So on to Nvidia, monthly data, nonlinear scale. We are going to quantify the move with this little drawdown in 2018. And you see the move so far has been about more than 18x. So a humongous move with a big pullback, resistance near Fibonacci levels, support near Fibonacci levels, and so on. Nvidia monthly data starting in 2007 all the way through 2024. We'll use the high and the low at the very early stages here between 2007 and 2009 to quantify the move, and the move has been much greater than even 47x. So an unbelievable move, a big move up between 2015, let's say, to 2019, and you could have caught this leg very nicely. Then another uptrend starting here in 2020 all the way through 2022, and you could have captured that. And of course, this is our current uptrend. So again, we're getting a range of negative headlines. Most recently, for example, Stanley Druckenmiller sold a bunch of positions, and he certainly caused a little trip in the market a couple of days ago. More arguments about why it's overbought and looks bubbly. This is from earlier this year. So back to the monthly chart of Nvidia, I've shown you that we can follow the major trends without worrying about headlines, just using this very simple indicator. And at the current moment, we are in the midst of this mega trend, which started a long time ago, as I showed you in the previous slide. And our stop is a little bit above $600, maybe 602, 603. So we'll just have to keep following this trend and see where it ends up. And of course, I have no idea where the market's going. So in summary, the default Chande Kroll stop right now for Nvidia is somewhere in the range of 602. The lessons from Berkshire and all the long-term traders is hold for the long term, and that's what this indicator will help you do. The tools are at TrendSpider.com. I hope you like and subscribe, and thank you for listening.